afternoon to one and all present here. On behalf of St. Joseph's College of Commerce and jointly with the Old Students Association of St. Joseph's College of Commerce, I invite you all to a guest lecture on GST implications. GST stands for Goods and Services Tax and is proposed to be a comprehensive indirect tax levy on manufacture, sale, and consumption of goods as well as services at the national level. The Constitution Bill 2014 was introduced in the Lok Sabha by Finance Minister Arun Jaitley on 19th December 2014 and passed by the House on 6th May 2015. The bill was passed by Rajya Sabha on 3rd August 2016 and the amended bill was passed by the Lok Sabha on 8th August 2016. Our Honorable Prime Minister Mr. Narendra Modi considered the day on which the GST bill was passed to be a historic occasion, and he considered GST to be the best example of cooperative federalism. In order to get a better view and clarity about GST, we have with us Shri S. Venkataramani. He specializes in commercial taxes. A graduate in science, he pursued chartered accountancy and qualified in 1988. He was in independent practice for a year prior to joining Messrs. Singhvi, Dev and Unni. He is practicing in the field of indirect taxes since then and is mainly involved in indirect tax planning and representation at various levels. He is regular speaker at various fora and has presented a number of papers on indirect taxes at the state and national level. He has co-authored 2 books, one a handbook on value-added tax and the other on audit under the KVAT laws. He has served as a member of the Goods and Services Tax Committee of the Institute of Chartered Accountants of India, a co-opted member of the Fiscal Laws Committee of the Institute of Chartered Accountants of India, a co-opted member of the State Taxation Committee of FKCCI, a co-opted member of the Indirect Tax Committee of the ICAI, New Delhi. Presently, he is the chairman of the State Taxation Committee, Bangalore Chamber of Industry and Commerce, a member of the state-level advisory board, VAT committee appointed by the government of Karnataka, a member of the GST committee of the All India Federation of Tax Practitioners, a member of the GST committee of the subcommittee of SIRC of the ICAI, a member of the Indirect Tax Committee of ASSO-CHAM, a member of the Fiscal Policy Institute of the Government of Karnataka involving in structuring, designing and course curriculum for the officers of Commercial Tax Department. Now, on behalf of our college, I request our principal, Reverend Dr. Daniel Fernandes, to hand over a floral arrangement to our speaker for the day, S. Venkataramani. Now, I request Father Roshan to hand over a floral bouquet to our alumni president, Mr. Vinay Mruthyunjaya. I also take this opportunity to welcome all the members of the Old Student Association of St. Joseph's College of Commerce who are present here for the talk. Thank you. Over to you, sir.
Respected Father, Principal, Faculty, my good friend Vinay, my colleague from office, Pritisha, my great friend Kiran is also here. Dear children, 30 years back, I was sitting there in one of those chairs. When there were faculty speaking on the stage, I couldn't put 2 sentences in English together. That was my position. As the child here said that I'm a science graduate who has moved to commerce. I didn't know what your accounts was. I didn't know what your trading account was. I never knew the 3 rules of accounting. I moved to CA. I entered an ocean without knowing swimming. I had to go to the pool, learn swimming, and get into this ocean called chartered accountancy. I must confess to Father here that some of the alumni of this college, most of the alums here will know, are my seniors and some of the most brilliant CS the country has ever produced. One of them is sitting here, Vinay. Mohanpai, I thought, was from this college. My junior, Padam Kincha, my senior, Raghuraman, Ravi Shankar, in many ways my mentor. They are all from this college, from St. Joseph's. I don't know if I've missed many names. Kiran is my consultant. I'm not consulting, he consults for me. So that's how it is. If I'm able to speak a few words today, I think credit goes to Vinay. I didn't learn public speaking when I was in college or when I qualified. I was 32, age 32, in the year 1994, when out of the blue, Vinay was the chairman of Bangalore branch of Chartered Accountants, Institute of Chartered Accountants of India. He called me 2 days before and he said, you have to speak on the state budget on April 2nd, when the budget was announced on 26th of March. I had 5 days. I literally didn't sleep. I didn't know what to read. I didn't know how to hold the fort for 2 hours on a dais where senior members of the profession will be there. And that was my starting point. Thanks, Vinay. From then I have never looked back. This is my second public speaking session in this very same auditorium. I'm sure some faculty here would remember me that when Father, you had that university program for the students across Karnataka, I also spoke on GST. At that time, the goods and service tax was probably in its infancy. Nothing had happened then. People were talking a lot of things. When Vinay called me and told me that I have to speak to children here to educate them about goods and services tax, I was just putting together some thoughts in my mind to find out how should I take you along with me on this goods and services tax regime. So I had a first few questions where I would like children to put up their hands to tell me whether what I have written there is right or wrong. Can we go to the first slide? You can see those questions there. Put your hands to your heart, and when you raise your hands, it must be an honest answer. Don't think the way your teachers will think, or the principal will think, or your parents would think, or your brothers, sisters would think who are elder to you. So this is a straight and honest question. Question 1. How many of you here, please put up your hands, don't feel shy that your faculty is here. I'll request them not to look back if you want it to be that way. Please put up your hands. How many of you have gone to a New Year Eve concert by paying an entry fee of 4999, 5499, 9999, whatever that number is? How many of you? Can you please put up your hands? Don't tell me not one child, huh? Don't tell me. Be honest to yourself. Yes, I can see one girl here. I can see one of them here. It's any amount, not just this amount. It could be 500, it could be 700, it could be any number. Yes, I see some hands going up now. Yes, how many of you, again, put your hands to your heart. Tell me you have really read that receipt. Have you read it? Huh? You haven't read it, right? You just want that cover charge to be paid, run in with your black t-shirts on and ensure that you are there by 11:30. Nothing else. Just want to be there for the eve, want to have your dinner, want to enjoy that little bit of dance, music, disco, etc. Get back home at 3, 4, 5 a.m. in the morning. Look at the second question. How many of you have purchased a gaming software? Yeah, I see good number of hands go up. Good number of hands go up. How many of you have seen, if I can call it, a bill? How many of you have seen it? Can you tell me what is the content of that bill? Give me 3 contents of that bill.
Purchase, quantity, your service tax, and VAT 2.5.
Yeah.
That guy service tax.
Yeah.
But then now they say there's a third tax which they have to pay to the government.
But have you ever questioned yourself?
Yeah, we did, and then we asked that guy once, like, what is this three, which is this new one? And he told us we have to pay to the government. And we asked him why. And he's like, I don't know.
Okay, so you're saying 3 taxes in that one bill, right? Keep that at the back of your mind. Let's see what happens in a goods and service tax regime. How many of you have purchased books? I'm sure I must see all the hands go up here. How many of you have seen that invoice? Have you ever demanded a bill? No? Should we be ashamed of ourselves? We haven't seen a bill. How many of you have seen a bill with a tax for books? Did you ever see a tax on books in the bill? No? Shall we purchase one book for 50 rupees today and see whether there is a tax on the bill? I think we can. Right? Think for yourself today. Go buy a book for 50 rupees, demand a bill, see if there is a tax on that bill. How many of you have put petrol for your vehicles? You get bills, right? You swipe your card and move out. What does that bill say? Does it talk of tax? Huh? I'm amazed that we don't even see what is there in the bill in our hands when we are 16, 17, 18. We don't see it. Right? I will skip question 5. I will go to question 6. How many of you have got the basic goods at your home service? Say a refrigerator, say a television, say a fan, say a home theater, say a music system. I'm sure all of us have gone through some trouble, right, with our television sets, music systems, computers. And I'm sure we got them serviced, right? Have you seen those invoices with the number of taxes? No, we haven't. How many of us have stayed in a resort? Good number of hands. What do we do there? We play, we eat, we hire rooms, right? We hire rooms, we give clothes for laundry. Have you realized how many taxes are there in this system of staying in a resort or a hotel? I'll come to that. Last question, last but one question, I'll go to the 9th question. How many of us have played with the internet by, let's say, buying a book from Flipkart, Amazon, Snapdeal, use the internet? Huh? Those invoices come with the package, right? Have you ever seen in whose name it comes? Does it come on Flipkart's name? Does it come on Amazon's name? No? Why didn't you ask those guys? Because you pay Amazon, right? You swipe your card. It's COD, cash on delivery. Why didn't you ask those guys? I paid you, but you're giving me an invoice on somebody else's name. Did you ever think about that? This is how business works. Let me take probably 2 or 3 of these instances and tell you what is the need for a GST. Why did the government think that we need a goods and service tax? Go to the first one, the New Year Eve party. There are 4 taxes that you pay on the 700, 750, 1000, 1999, 3000, whatever. There are 4 taxes that you pay. What are the 4 taxes that you pay? You pay a luxury tax because you enter a hotel with an air conditioning. You pay an entertainment tax because there is music or a dance there, right? You pay a 3rd tax called a service tax because there is a service that he renders to you. He gives you a chair, he gives you a table, there is somebody who gives you food there, and there is a 4th tax that you pay because you have your dinner there. So there are 4 taxes on one payment. There are 4 taxes on one payment. Now, if these 4 taxes, a hotel has to pay, a conference venue has to pay, an event at the palace where Vinay is a part of has to organize and pay, life is miserable. It is horrible. Now, out of these 4 taxes, There is one tax which the union government levies or the central government levies called service tax. 3 taxes are levied by the state. Your luxury tax, your entertainment tax and VAT or taxes on food are levied by the state. Go to the second question. The lady here was telling me that when she buys a gaming software, there are technically 2 taxes. There is a service tax and a value added tax. So in respect of select commodities, there are 2 taxes that you pay. For example, software. On every rupee 100 you pay, there is a service tax at 15% and there is a value added tax of 5.5% on the same 100. One is levied by the union government, the other is levied by the state government. Take the case of third, on books. There is no tax on books. There is no tax because the government promotes education. There is no tax on books. There is no tax on healthcare. There is no tax on education. So there is no taxes. Go to the fourth. When I said petrol bunk, I don't think you have noticed the invoice. It will say inclusive of all taxes. But the tax on petrol or diesel is levied under a completely different law called the Karnataka Sales Tax Act. And there is a surcharge which the central government levies under the Petro Products Act 1954. So there are different taxes which are levied on the same commodity. When I said you stay in a resort, you look at the number of activities that you do in a resort. You probably give your clothes for a laundry. You pay only the room rent, but he says breakfast free. I'm sure you would have seen those situations. He will say room rent includes breakfast. So yet again there, we continue to pay 3 taxes. We continue to pay 3, in some cases 4 taxes. What the government thought in its wisdom, that it's extremely difficult to conduct business for any businessman to keep a tab on this number of taxes. So we need to get all these laws into one single unified law in the country. And that is where we are moving to from 1st of April 2017. Come April 1, 2017, I can assure this lady sitting here or the student sitting here that she will never see 2 taxes in an invoice. She will only see 1 tax and it will be very easy for her to calculate on the price whether the tax she pays is right. I can assure every child sitting here that when the goods and service tax comes in, the first bullet point that you see there, or first issue that you see there, when you pay a 4999 or 5999, you will never have 4 taxes. You will have only 1 tax that you will be paying. Today you will be so confused on seeing that invoice. You don't know on service tax on what value you are paying, value added tax on what value you are paying. So you don't see it at all. You will see only 3 items but 4 line items for your taxes. So you get frustrated seeing that. And you don't know whether it's right. You pick up a fight with them. All this is expected to go away effective 1/4/2017. Now let's quickly look at what a goods and service tax regime is and what you as the citizen of this country should expect the government to be doing. This should have come in India 15 years back. We are 15 years late. Nevertheless, this is what the goods and service tax regime will come. Most of the taxes that you are seeing today, your excise duty, your service tax, your value added tax, your entertainment tax, your luxury tax, your entry tax, etc., will no longer be there effective 1/4/2017. This one law called goods and service tax will take into its fold 11 statutes which will merge into one law. It will merge into one law. That is why it is called a single levy on goods and services. Today, as this child was saying, on service you pay service tax, on goods you pay tax on goods, on manufacture you pay excise duty, on import you pay customs duty, and it is never ending levy of taxes that you will find on every activity of your life. Tomorrow, these will become one single levy on goods or services. So whether it is goods or whether it is service, you enter a hotel or you have your food, you buy your gaming software or you buy your books or you buy a pair of sandals, you will find one single tax at one single rate. And that's what the government is moving. Now, the goods and service tax also talks of a destination based levy. So whatever you are learning today in your commerce institutions, the entire law is going to move upside down, effective 1/4/2017. Today we have an origin-based taxation system. What is an origin-based taxation system? Pay excise duty on manufacture. When you move goods, let us say from Bangalore to Chennai, I am sure we have seen trucks moving from Bangalore to Chennai, Bangalore to Hyderabad. The tax that is charged by the seller is retained by the state today. Come goods and service tax regime, the tax also moves with the goods. It moves with the goods. That is why it is called a destination based consumption tax. Today it's an origin based taxation system. Tomorrow it's a destination based taxation system. Those of you who have scanned the net, those of you who have read the newspapers must also have seen that some states are against the goods and service tax. Now, commercially or under law, we call these states rogue states. Who are these rogue states? Our state is also a rogue state. Karnataka is a rogue state. Maharashtra is a rogue state. Gujarat is a rogue state. Why do we call them rogue states? This rogue states is a very colloquial term because these are manufacturing or producing states. They export their goods or export their services to some other state or some other country. You visualize a state like Orissa, you visualize a state like West Bengal, Bihar, or perhaps Uttar Pradesh. They are consuming states. They consume the goods, they consume the services, they don't produce, which means their consumption is more than their production. Therefore, those are the states which will be benefited. India is not able to transfer money to states with these large populations which consume. There is a limitation under the constitution. Like central government cannot give a grant of 25,000 crores, let's say, to a state like Uttar Pradesh, or a 10,000 crore to a state like Bihar. There is no provision to give it. Once we move this levy from a producing state to a consuming state, wherever the goods or service is consumed, that is the state which will also get the tax. That is the state which will also get the tax. So when you see trucks moving from Bangalore to Chennai, Bangalore to Hyderabad, Bangalore to Goa tomorrow, you must mentally keep in mind that the tax from Karnataka is also moving to that state physically. Physically. The government does it at the back end. Tax is charged here, paid by the business, but the government of Karnataka moves this tax from Karnataka to, let's say, Telangana, or Karnataka to, let's say, Goa. It moves the tax on a month-on-month basis. So it's important that there should be no evasion or avoidance of taxes. Therefore, what the government did, it reduced the cascading effect of taxes. Today you have 11 taxes. This will now boil down to one tax in a goods and service tax regime, and you will find only 6 rates of taxes. Why are we having these 6 rates of taxes? Like the little girl sitting here can turn around and say, sir, it is hell to know which commodity is taxable at what rate. You buy a school bag which is Wildcraft, probably it is 5%. If you buy a leather case for your computer, it could be 20%. Life is hell. We would not be in a position to ask children what is the tax that we pay. So what the government did, it classified the entire list of goods and services, which is roughly 7,000 in number, to the best of our knowledge. Some of it could be left out still. And it classified the entire goods and services into 6 categories. What are these 6 categories that the government talked of? The government said exports will be exempted. You move goods or service from Bangalore to US, Bangalore to UK, Maharashtra to, I don't know, Singapore. We will exempt that because we need to promote exports, we need to promote business, we need foreign exchange. So they said they will export, will be exempt. Second, they said we will also have to exempt some commodities which are required by common man, because he can't afford. Children sitting here perhaps can have the luxury of going and having a dinner in a hotel, but somebody in a mufsil area cannot afford the luxury of going and eating somewhere. So the necessities of that human being, we said, should be kept outside the purview of taxation. So they came up with an exempt class. What are the exempt class of goods? Food, which is a basic requirement of a human being. They said we will keep it outside the purview. What are the foods that we are talking of? Your rice, wheat, dal, pulses, etc., etc., etc. Whatever is a basic requirement, government said we will exempt that. We will exempt that. life-saving drugs, because healthcare, education and food are three essentials of a human being. So they said these three we will keep it outside the taxation net. But there are some commodities which are really not life-saving drugs but which are marketed as life-saving drugs. For example, your body lotions, waistline that you are talking of, your creams and odors that you talk of, they are not life-saving. They said we will tax those commodities probably at higher rates. So anything that is life-saving, anything that is education, anything that is healthcare will go into the exempt category. 5. Healthcare should be affordable to all human beings in India. So they said drugs, we will keep it at a lower rate of 5%. We'll keep it at a lower rate of 5%. So drugs, they said we will keep it at 5%. They also said non-essential food items. Now what is an essential food item? What is a non-essential food item? You have to be clear. Essential food item which is required for your basic cooking on a daily basis. So the government said, you take for example those of you who have entered your mother's kitchen, I am sure you would have seen, you will find sunflower refined oil, but at the same time you will also find some other oils which are not refined. They said whatever is purified, whatever is refined, whatever is higher cost, whatever is packed food, we will charge you taxes at higher rate but others at a lower rate. So the classification comes in, children here will realize that these are essential and others are not essential. They said ready to serve foods, we will charge you tax at the rate of 12%. The small hotels that you find here who cater food will be at 12%, whereas a luxury hotel which you find as luxury products or demerit goods in the end, Ashoka Hotel or a Vinsamana will be subject to 28% tax because that is not a necessity or essential. So this is how the government has gone about classifying these products. You will find a standard rate of 18% there, which will also be some of the industrial produces. For example, your table, chair, furniture, computer, desk, software, etc. could get subjected to tax at the rate of 18%. So this is how we have gone about classifying. Demerit goods are also called sin goods, S-I-N, sin goods. Your tobacco, your alcohol, your gutka products, etc. Air conditioners costing beyond a particular limit, refrigerators beyond a particular limit. They will all become demerit goods and they are only required by the rich and the mighty. The government said we will tax them at a higher rate. So going into a GST regime, you will have 6 rates of taxes including the exempt ones. I was telling you a few minutes back that when we go to a goods and service tax regime, we are likely to have only one tax. But I am going back on my words here. If you see the last but one bullet point, that you will find 3 abbreviations there called CGST, SGST and probably IGST, which is missing there, but it's also called IGST. Now why would we have 3 taxes instead of 1? The C there denotes central government, the S there denotes state government, the I there will denote interstate, but that is missing there. Now what we did by C and S is this one rate of tax will be divided into 2 halves. When you find the rate of tax there at, let's say 12%, there will be a 6% CGST, 6% SGST, which means half the tax goes to the central government, half the tax is retained by the state. So that is how the taxes are going to be divided. Your job as a business, when you look at your invoice, you are just required to see these 2 elements, CGST, SGST, and ensure that the rate is right and ensure that the figures or numbers there or calculations are right. Now we will go to the last bullet point here, rate of tax on services. Now service is labor. Let's understand service as pure labor. A plumber who comes to fix the tap in your house is a service provider. India thrives on services. In fact, our income from services is higher than income from goods. Therefore, we said we have to encourage service simply because of the huge manpower that we have, and therefore we should keep the rates of tax lower on services. The rates of tax on services has not yet been announced by the government, but trust me, it will fit into one of these slabs that you find here. It could perhaps be 5, it could be 12, it could be 18, but it will never be 28. It will be lower. Therefore, services will be encouraged. It will come to a lower rate of tax. Next, what are the state level taxes that you are seeing today and what are the central level taxes that you are seeing today. One, on manufacture you have excise duty, on imports you have countervailing duty, you have special additional duty, you have service tax, that CST is central sales tax. I'm sure those of you who are in final year would know what central sales tax is. There are cesses, surcharges, there are research and development cesses. Petroleum products will be subject to tax at a different rate. And what are the state level taxes that you have? To your right on the screen you can see, you'll have value added tax, you have entry tax, you have purchase tax, you have luxury tax, all the examples that I gave you on slide 1, you have an entertainment tax. All of these taxes will go, you will find one single levy come April 1, 2017. Next. This is how the duty structure is. If I were to tell you children here that this is the law that we study in CA, you will faint. You will say this many number of laws, I don't know each law is for how many marks, life will be hell. It will be hell. Now, I think you are on that threshold in your career when you will be absolved from studying so many laws. Trust me, Vinay, Kiran and I, we all did all these laws when we were studying for our final or probably looking at every part of our profession today. All these laws will go, you will have perhaps one single law that will be introduced when you get into profession or when you get into your higher studies. So this number of laws will go, it will get into one law. Just look at your life. If you have to do perhaps an excise duty for 20 marks, you will have to read a huge book. If you have to do a value added tax for 20 marks, you will have to read one other huge book. So Kiran was telling me by looking at my bookstore, when I look at those books. So all those books you will not see going forward. It will be one single small act, and trust me, believe me, it's going to be as simple as possible. I think we will have to support it. Next. What are the objectives? Why did the government think that goods and service tax? Is there no other taxation system? Is there no other taxation system? I must tell these little children present here that when I was part of the committee, we discussed 3 levels of taxation or 3 aspects of taxation. One is your income tax, which is your tax on income. Second is a tax on goods and services. The third tax that we are talking of, taxes on imports. So the first one we thought was, why don't we abolish all these taxes? We'll abolish all these taxes. We don't want income tax, we don't want sales tax, we don't want service tax, we don't want customs duty. The government must get revenue to render services to its citizens, which we call sovereign services. Children sitting here can afford education. There are others who can't afford education. So what is a sovereign service? A sovereign service is a service that the government renders to its citizens. You go to a government school, there is no fee. You go to a government hospital, there is a 10 rupee registration fee and they don't charge you for medicine. Your roads are coming out of the taxes that we pay here. But a substantive part of it, like the service of electricity, is given free by the government. Water, they charge you a rock bottom price, but the movement of water from, let's say, Mysore to Bangalore costs one hell of a lot of money. So we said, how does the government get this money from? So we said, we will scrap all these taxes. We thought about it. We'll scrap all these taxes. We will have a straight 2 or 3% tax on every single banking transaction. That means you draw 100 rupees out of your debit credit card or through an ATM. We said you get only 98 out of every 100 that you draw. But then we realized that India is not an economy which is still a paperless economy. You go to the rural world, people still interact. Even you kids will be carrying cash if I check your bags. So you will be carrying cash. So we said that India is still not a mature economy and this method of economy should take some time. When we quickly computed 2% on every withdrawal or payment into a banking channel, we realized we will collect 4 times the tax that we collect through all of these taxes. So we said this is not a mature economy and therefore it will take some time. Second, we said there should be no income tax. Let's at least abolish income tax. Let the state level taxes on goods and services be. But then the government said, how do I collect this money? The government said, instead of levying an income tax, we will tell every citizen of this country that he has to pay 1,000 rupees, whether he is small or big or earning more or earning less. but then that becomes a different mode of society. We said a farmer in a village, and let's say the father sitting here or I practicing as a chartered accountant cannot have, but we had a threefold increase in taxes at 1000 rupees per citizen, per household, per child, etc., where the government can render its service. We are still not a mature economy. Therefore, we shelved all that and we came up with this single law. So, if you look at the objective of the proposed goods and service tax regime, we have only two levels of taxation: the central goods and services tax, which is levied by the union government on all other 6 taxes that we talk of: excise duty, a part of customs duty, surcharge and cesses, R&D cess, etc. We'll get into one single levy called GST. And in respect of state level taxes like VAT, CST, entry tax, etc., it will have one single levy called SGST. And in respect of interstate movement of goods or services, where you move goods or service from one state to the other, we'll have a tax called IGST. This is the objective of simplifying the entire 11 statutes into one statute to make life easy for all of us. Next. Now, if you quickly look at, as commerce students, I think all through your life, you have been only reading purchase, you have been reading sales. Going forward from April 1, 2017, I don't want any child sitting here to talk purchase or talk sale. You only have to talk supply. So what is the difference between a sale and what is the difference between a purchase? Or what is the difference between a sale and a supply? We have learnt in our law that sale means there must be 2 parties competent to contract. In all our laws, 2 parties competent to contract. There must be a transaction of business, there must be money consideration present, and there must be a transfer of title in goods. In supply, there is nothing that is required. So the entire concept of sale and purchase that you have learned is turned upside down. Now, every single supply, there need not be a transaction of sale. For example, I am sure it will hit you like a rocket if I give you this example. We go to all these stores, they give you samples to taste, right? They give you a shampoo sachet. They will say, with a pack of noodles, a spoon free. They give you all of this, right? So he only charges you for the noodles, but the spoon comes free. Many times he will tell you, buy a 500 ml of shampoo vial, you will probably get 100 ml of soap free or a little soap free. Now the government said, all of this is a purchase and sale transaction. You forget all this, we will tax you on supply, which means the entire concept of purchase and sale, right from your books of accounting, your Shukla and Grewal and B.V. Ramans, have all got to undergo a change come April 1, 2017. So if I have to go to a Shukla Grewal, I will only see one trading account which will say purchase, sale, trading account, manufacturing account, double entry, all this. The whole thing has to undergo a change. We have to now talk supply. A supply can be free, a supply can be for a price, a supply can be movement between states, a supply can be between father-daughter, father-son, between any individual. So long as you are carrying on business, that supply will be a subject matter of taxation. So what is an inward supply? An inward supply that you see can be only 4 classes. It can be a local supply, which means within that state. Today what you call as local purchase or purchase from Mumbai, or when you import from, let us say, Singapore or US. Now all this will get subjected to tax even in a goods and service tax regime under that single law. So there can be only 4 classes of supply, including your consignment or stock transfer transactions, which you see in your accounting books. So these will be called supplies in a goods and service tax regime. I want each one of you here to remove the concept of purchase and sale come April 1, 2017. Next. What is an outward supply? Inward supply is technically your purchases. Outward supply is technically your sales. It can be sale of goods or it can be your sale of services. Now when you come to outward supply, again you have local supplies within the state, you have interstate supplies, you have exports. All of you know how the transaction works through distributors, through Shukla and Grewal, B.V. Raman, commission, markup, etc., right? All this when I speak will come to your mind, but when we take the books, it's out of our minds. Right? So we'll have sales through stockists, we'll have sales through consignment agent. You know what job work is, because you take something for repair, you can call it labor, you can call it job work. You'll have branch transfers, you also can visualize sale of scrap, because scrap is generated even at home. You sell your newspapers, etc. They are all nothing but scrap. You will have free supplies, because the example that I gave, you go to your shop, you get a shampoo sachet free, right? You have goods for demo. I'm sure you've got things for trial run at your home. Use this for 1 week. If you like it, take it. Don't like it, return it. You have what we call demo goods. You have goods which you send for testing. That means it's not working, so you give it to somebody, you tell him it's not working, he tests it, he checks it, he gives it to you back, right? You have maintenance of your televisions, of your electricals at home, etc. You also have warranties. I'm sure you know what warranties. You bought a mixie at home, that Sumit mixie is not working, your mom takes it back, she says it's not working, he gives you a different one, or he replaces a part, and you have exhibitions, fairs, etc., where you move goods, services, etc. All of these will become supplies. They will all become liable to tax. Today, what you read in your textbooks is only sale and purchase. Most of these, what I have said here, is not even part and parcel of your syllabus or your textbooks. It's not there. But trust me, this is how business works. This is how business works. And every single transaction that I have listed here, you are going to pay tax in a goods and service tax regime. Today, good part of it on the right hand side of the screen that you see, or column 2 that you see, other than scrap, is not liable to tax. Tomorrow they will be liable to tax. You can't hold a supplier that it's under warranty, therefore I will not pay you tax. He will do the job free, but he will tax you for the service that he renders. He will levy tax. So there will be a component of tax that you will pay. So all our books, records, etc. have to be really relooked. Next. I was just thinking to how to get across this tax to children who are 16, 17, 18, 20. How do I get it to you? Now, everyone sitting here can ask me a question. My dad is selling his car. Will it be taxable? No, it will not be taxable. I am selling my television at home, or I am going and exchanging it with, I don't know, an Adishwar or a Girias or a Vivek and Co. Will it be taxable? These are the questions that will come. The law makes it clear that for a transaction to be taxable, there must be business. Any individual transaction, if father chooses to sell his car, it will not be taxable, because he is not a person carrying on business. He is the principal of St. Joseph's College. It will not be taxable. It will not be taxable. If madam decides to sell her old jewelry which she is wearing, will it be taxable? She will not be taxable, because she is not a person carrying on business. So this entire scheme of taxation is so devised that you have to first be a person carrying on business. Look at the last column on the brown that is coming there, in the course or furtherance of business. So we have what is called as a business test in a goods and service tax regime. A transaction will be taxable only if you are in business. If you are not in business, you will not be taxable. Ma'am, can I have 5 more minutes? I'll close. I don't know when's the next session starting, for the 5 to 10 minutes. Yeah. Only when you are carrying on business. Leave the third column there, go to the second. So you must be a person carrying on business. You must be selling taxable goods or taxable service. What is an exempt service? Education is an exempt service. Books is an exempt service. Sale of dal, wheat, pulses will be an exempt sale or an exempt supply in a goods and service tax regime. So there must be goods or service. You must be a taxable person. You must be carrying on business. Only then the goods and service tax law will apply to you. If you are not, mentally get free that you will not be liable to tax. Place of supply is very critical in a goods and service tax regime. I want every child here to keep in mind that the entire law has moved upside down from an origin based taxation system to a destination based taxation system. So today, if you are going to pay an excise duty on manufacture and a value added tax on sales, tomorrow both these will go, you will be charging one goods and service tax, and the tax moves with the goods. So every time you see a truck moving to another state, mentally get clear that the tax you are paying is actually moving to some other state. it is moving to some other state. So you are enriching some other state by moving goods or moving service from one state to the other. So why did the government do this? Why did it turn it upside down? The government is not able to fund the underdeveloped state over the last 60 or 70 years. And they have no mechanism of imposing tax because there is no sale or no service there. They are all consuming states. There are more number of people and less number of goods and less amount of services. The government thought this is the best way of developing those states and getting it on par with a Gujarat, Maharashtra, Karnataka or Tamil Nadu. Therefore, they said there will be a balance or equilibrium between states. All of them can move on together, but that is going to take some time from now. It's not going to happen in 1-2 years, but over a period of 5 years, you will see the states growing because the taxes will also grow in those states. Next. Now, what is registration? None of you who are sitting here entered this college without registration, right? You filled up a form, father gave you admission, college gave you admission, you paid your fees, you gave your passport size photographs, you gave your proof of address, you gave your marks cards, you gave your father, mother, all their addresses. So you went through a process of registration, right? So when you go to a goods and service tax regime, there is a process of registration. Today you have 11 taxes, therefore you have 11 registrations. Tomorrow you have only one registration in a goods and service tax law. Now it becomes extremely difficult to track businesses. You go to this Eva Mall which is next to your college, there is a business running on ground floor, there is also a business running on the 4th, 5th, 6th floor. Now it's absolutely difficult for the government to track which corner of a mall, which corner of a complex, which corner of a street there is a business running, he is paying tax or he is not paying tax. It's extremely difficult because the person who is administering that law is also like father, madam, Vinay, I or you who are sitting there to go and figure out whether he is selling, not selling, whether he is having only one table and chair. Life becomes extremely difficult. So what the government did, the government said, we will move this entire process of registration electronically. Electronic. We will make it electronic. Just as you sit at home, press your buttons and the internet streams in. I don't know how many of you here are aware that Google also gives you latitude and longitude, which means if you key in that latitude and longitude into this goods and service tax software, through the satellite imagery, it will exactly tell you Eva Mall, northwest corner, gate number 2 is, let's say, a Blossom Beauty Parlor. It will tell you. To that extent, they have tracked the goods and services tax network. So it's extremely difficult for businesses to get away without registration or non-payment of taxes. Today, what can I do? I can perhaps go to father's house, tell him, please give me one small room in your house which has a separate entrance, continue my chartered accountancy profession there. But tomorrow when I register, it will ask for father's premises or residential premises latitude and longitude, which means the east or western entrance to father's house will be earmarked for my business, and father cannot say, I have given it free or given it to someone, because the responsibility becomes his to say, I have not rented out or there is no business that is being carried on here. So to that extent, the goods and service tax network has tracked down businesses. So the government believes that evasion, avoidance of tax will no longer exist because it will leave an audit trail. It will leave an audit trail. Now I request each child here that it is our responsibility to safeguard government revenue. It is our responsibility to see that our nation is building. It is our responsibility that we are a part of the nation building exercise. Whatever we buy, whatever we do, please insist on bills. Please insist that I insist that you also read that and see what are the taxes that you pay in each of that. Now, what will happen to existing businesses in a goods and service tax regime? The law takes care of that position, that they will not harass existing businesses. So they brought in what is called a transition provision. How do you transit from 5th semester to 6th semester? Father does not go on asking you for your registration applications every time. You transit smoothly from, let's say, lecture hall 1 to lecture hall 2, from semester 1 to semester 2, and there will probably be a marks card that you will give as a photocopy, or the university collects it by itself to ensure that the little girl sitting here moves from semester 1 to semester 2. So to move you from the existing registration, the government will not harass you. If you have a valid number, it asks you for some formalities, including the Google trap, what we call a latitude, longitude, and they automatically transit you to a goods and service tax regime. It's as simple as that. I suggest those children who have access to computers and internet at home, I want you to go to the goods and service tax network. Please go to Google or Google Chrome, type goods and service tax network. I want you to see that goods and service tax network live, kicking and working. I want you to see it and see how simple the government has made this network. Trust me, somebody who knows a little English, 6th class, 7th class pass, can operate that menu driven site. It's as simple as that. Next. What are the compliances? Now, what are the compliances? Now, as a child, you have 3 compliances to your institution that you are studying in. What are the 3 compliances as a child? First is registration, second is registration for examination, fourth is producing your marks, third is producing your marks card when you qualify, the university collect. These are simple compliances for you. The university does it for you, or the parents do it for you, or your teachers do it for you. Similarly here, when I am conducting business, they are very simple compliances. Half of it what I have said here, the network takes care of that, which means when you sell, you just key in, go to that network and key in your invoice. I am sure every child sitting here knows what a sales register is and what a purchase register is. I am sure you know those formats: serial number, invoice number, date, name, address, supplier name, description, quantity, value, signature, etc., etc. It is the same details that are required here. You key in those details in the network. Similarly, from whom you have purchased, he will key in that network. This network beautifully works to leave an audit trail. You cannot camouflage a purchase or not account a purchase, because the seller will be uploading it onto the website. Seller will be uploading it onto the website. Today, the university tracks your marks card through the website. If your parents know the password, trust me, they can't hide your marks or grades. It's not possible, right? Similarly here, if I know the password, I can track down my purchase and I can track down my sale through the network. There is very little scope for evasion unless both the buyer and seller agree not to account for it. Therefore, I insist that you demand a sale bill, in which case it will get accounted. We also become a part of nation building. Next. The goods and service tax regime is so simple that there will be paperless movement of goods. Today, those of you who effect purchases from Flipkart, Amazon, etc., seen a paper being stuck to the package, which will be an invoice, or there will be a copy of the invoice which will be inside the packed goods or packed commodity. You go to your shop, he gives you an invoice. There is no need of any paper movement in respect of a goods and service tax regime. If you insist, he will give you a bill. If you don't insist, he will give you what we call as ERN under law, or an electronic reference number. This is basically to cut down usage of paper. This electronic reference number will be on your name when you purchase, will be on your address when you purchase. You can log into the goods and service tax network, type this electronic reference number, your invoice will pop up. You can check whether what you have purchased is what you have received. 2 years down the line, you can check whether what you have purchased is also still on the website and it continues to exist there, to ensure that he accounts it. This is the extent to which automation has been carried out by Infosys majorly and partly by Wipro. Now, to tell you what a paperless movement of goods is, you know how trucks today, when they move with goods, carry a transporter's copy, a buyer's copy, a seller's copy. This is what you would have learned. There is no requirement tomorrow of any of these invoices. All it will need, I don't know how many of you operate through mobile. It will give you an OTP or a one-time password. So this is a one-time electronically generated alphanumeric number that you will get. If you are able to store that, you can move goods or you can move service across the length and breadth of the country. There is no need of a hard copy of the invoice. It is as simple as this. But you must also be mentally clear that this data is accessible to the government 24/7. 24/7. It is accessible as much to a municipal corporation as to Mr. Arun Jaitley sitting in Delhi. So the government has full access. So the question that we have to ask here as citizens of this country is, how secure is my data? How secure is my data? Because today, if you have Colgate selling Colgate toothpaste and Hindustan Lever selling a close-up toothpaste, business is so competitive that it is price-driven, market-driven, person-driven, people-driven, brand-driven, right? Now, in all of these cases, it is so closely monitored that data will not be available to all businesses, but data will be available only to the business and the government. I can now put all your doubts to rest by saying that, let's say father is having a bank account which is electronically operated, you can trust me that even his family would not know what is his balance unless he chooses to give his password to his family and say, okay, this is my password, you do what you want. So your password is a mighty sword in a goods and service tax regime. You lose it, your data is lost. You don't lose it, you protect it, you safeguard your data. Of course, it will be accessible to the government. Just as the father's bank balance today, trust me, father, it is known to the income tax, it is known to the government, it is known to the banker, it is also known to the state government authorities. To that extent, yes, it is known, it is accessible, but it is not known to probably your faculty who work along with you here, or your colleagues at home, or your family at home, or your friends. Unless you choose to give them your password, it will not be known. To that extent, data is protected. We have also saved on paper. Next, I will skip this output tax liability because it works on a set-off mechanism. It is quite complicated. Thank you, children. I thought I will share the small things about goods and service tax. Make it as simple as possible for you to understand, to drive out the devil from your head that there is something coming in which is so mysterious. There is nothing mysterious about goods and service tax. I think when we get 11 laws into one, to get the muck of so many laws, when I see the books that the children read, your mercantile law, your labor law, your that law, your MRTP law, I feel terrible. So if in one stroke we are able to cut down on 11 laws, get it down to one, we are out of 10. So I think as citizens of this country, we need to welcome this unique piece of legislation, and the government has really worked very, very hard on it. Very hard on it. So thank you, children. Thank you, father. Thank you, faculty. Thanks, Vinay. My colleague Pritisha has taken a lot of trouble to put this. I think she deserves a hand, and it's not my effort. Thank you all. I am now open for questions. Any question any child has got, any question, don't hesitate. It may be silly. I told you 20 years back, I didn't have the courage to put two sentences together and stand here in a public forum and speak. I was one among you there, always shy, thinking if I ask, somebody will laugh, thinking that if I ask some question, a child around me is going to bully me. Trust me, it's not worth keeping that in your mind. I think it's the simplest ones are the hardest ones to answer. The silliest ones are the most complicated ones for the speaker to handle. It's not going to be easy for me to answer if it's silly, simple, or complicated. Be free, be open, ask your questions. Yes, sorry madam, I'll come after that. Yes, please. I need your name. Yes, Sindhuja. Yes, yes. Now, please sit down. Please sit down. I have to answer that question. I said petroleum and alcoholic products will be kept outside the goods and services tax regime. Why did petroleum products and alcohol be outside the goods and service tax regime? Let's all understand that India is short on fuel. We don't have. The entire fuel, 97% of India's petroleum products are imported by way of crude, thereafter refined through the 4 oil majors that we call, 4 oil majors. We don't have petroleum products. Now this petroleum products is market driven, foreign exchange driven, which means if the OPEC countries or the petroleum producing countries decide to increase the price, it will hit you directly. That is why today you are seeing every once in 15 days, either the price goes up by 1 rupee 89 paisa, comes down by 40, 50 paisa, etc. The states don't have the money to procure directly. The states don't have the money and they can't stand the foreign exchange fluctuation. Those of you who have seen papers today, dollars dropped, rupees dropped, it sunk. So government can't afford this, which means dollar price has gone up. Citizens can't bear the brunt. Therefore, subsidies in respect of petroleum product are largely driven by the central government, which means it acts as a shock absorber. It absorbs the shock of fluctuation in petroleum prices, tries to drive these prices, or what we call as APMs, administrative price mechanisms, to keep the price of your petrol and diesel, which is actually turning the wheels of this country, right, at a price that is affordable to the citizen and affordable by the industry. Therefore, they are protected. Therefore, they are kept. Alcohol, why is it kept outside the goods and services tax net? Alcohol is something which the government thinks is sin goods, SIN. Socially undesirable commodities are called sin goods. Tobacco, gutka, pan masala, pan parag, alcohol of all kinds. Alcohol can also be a drug. Be careful. It can be a drug. It's a raw material for your drug. Your cough syrup has 4% alcohol. So it's required by the industry, right? But alcohol which people drink, which is socially undesirable, the government wants to keep that out of the goods and service tax net. All these tobacco products too, to ensure that they levy taxes at a higher rate to make it unaffordable to the common man. Therefore, they have kept it outside the goods and service tax net, because if you keep it in the goods and service tax net, you have to fix it with one out of those 6 rates that I told you, 0 exemption, 5, 12, 18 or 28. They want to keep the rates of tax higher, therefore they kept it outside the GST net. Yes, madam.
So I want to know this. Has the government thought of protecting the consumer? Say for example now, from the point of view of the seller, they are covered through the networking. But as the student itself had told, when she asked him, I don't know. So can he enter a wrong number or a wrong product, and then what do we do? Whom do we report to? How do we protect?
Okay. Now take an example where, for example, madam has purchased a pen. Let's say she's purchased a sheaf of pen. Now to ensure whether this is reported, recorded as a supply of a pen, etc., you have a GST helpline. You go to that GST helpline, you log in with your query. In 7 common working days, you will get your answer. What is 7 common working days? For example, a central government may be closed on April 14th. A state government may not be closed on April 14th, right? Therefore, it depends whether you have purchased it interstate or whether you have purchased it local. So, they have said on the days that the state and the center work together, in 7 common working days, you will get your answer to your query. It is as simple as an RTI. All you need to do is give your ERN or scan your invoice, put it in the network. It will reply to you whether it's accounted by that person or not.
And what if he gets a duplicate bill?
Okay. Issue of duplicate bills in a goods and service tax regime is near impossible according to me. It's near impossible. Because every single transaction that you register must get onto the network. Now, madam, if you are suggesting to me that he could print a bill and issue, perfectly possible. Perfectly possible. But then it also needs 2 hands to clap. It needs 2 hands to clap. The person supplying may issue the bill, but if Vinay is going to be the person who is going to receive these goods or services, if he is going to account this as his purchase, trust me, you are in trouble. And in fact, the government has vested in itself a 300% penalty and powers to arrest. Both. So it's a deterrent. But it is possible. Possible. It is possible. It is expected that it will not happen because of the rates of tax and the audit trail that the system will leave. 1 out of these 5 people, if he accounts, it goes back to the originator. So life is not going to be easy. It's tough, but it is possible. Something like your software. It's tough. It's tough to hack an Apple iPhone, but it's possible. Yeah.
Regarding this,
Sir.
excise duty.
Yes, sir.
The manufacturing unit is Bombay.
Yeah.
Customer is stationed at Bangalore.
Yes, sir.
Now, to clear the goods from the manufacturing unit, he has to give CT3 form.
Yes. Yes.
Whether that is applicable from April to...
No, sir. The entire Central Excise Act 1944 is being repealed. It is being repealed. So there are no forms, your CT3, your 57F4, your AR3, nothing of that will apply in a goods and service tax regime.
What about C form?
No C forms, no F form, no H form, no I form, no E1, E2, no form G. Your entire CST law is repealed, effective 1/4.
Turnover at the show. What about charges for that?
You will charge goods and service tax at one of the 6 rates that I showed you here. If it is exempt, it's exempt. If it's 5%, it's 5%. If it's 18%, it's 18%. That's it. Yes. Yes. Your name? Ujjwal. Yes, Ujjwal. Children, silence please. Let's all hear him. Yeah? Little louder. VAT law?
So if alcohol is similar to tobacco products.
Alcohol is similar to tobacco products. Okay.
It's simple. So why can't cigarettes or tobacco products be charged at a higher rate and why is it confined to 28%?
Okay, please learn. The rates in respect of sin goods which you saw here as demerit goods at 28%. That's why I said, those of you who have seen the news clippings or newspapers. Now, in the demerit goods itself, we have a number of products. For example, an air conditioner is considered to be a demerit goods. The example that I was giving here is probably the toilet articles which we all use, body lotions, perfumes, etc., etc. They are all demerit goods so far as common man is concerned. Those will be taxed at 28%. So far as alcohol, tobacco, gutka, pan masala is concerned, basic tax rate will be 28%. The government has left the option open to levy a surcharge. So that is the one where the GST Council is debating. By November 23rd, 24th, you will find a surcharge on demerit goods, and trust me, it will be prohibitively expensive. It could be more than the tax. It could go up to 100%. So you will find a 125% tax on alcohol. Yeah. So a bottle of beer which you buy at 100 could probably land at 250. Yeah. Yes. 2 more questions. Any 2? Yes, madam. Children, silence please. Silence please. Can I have the attention? Yeah.
Supply chain. So if I'm purchasing goods from one thing, then after that there's a process that it goes through, and then it gets sold to another person. Who is the person who's actually going to charge the tax, and how many times is this whole tax?
Yeah. Good question. The student here was asking a question that in a supply chain transaction, how many times will the supply get subjected to tax? Madam, every supply will be subjected to tax. Now let me give you an example. Surf Excel, you know it, right? We all use it for our washing machines. Surf Excel is manufactured at Mangalore by Unilever, right? Obviously, Unilever can't sell it to madam sitting here. She can't, because India has a 125 crore population. He doesn't have the wherewithal. So what does he do? He appoints super stockists, he appoints distributors, he appoints wholesalers, he appoints retailers. From there it comes to your provision stores, your Reliance, your Footworld, your across the road mom and pop shop. It comes there, and you are the ultimate consumer of this Surf Excel. Every stage of it is taxable with tax credit that is available. So to give you an example, if Hindustan Unilever, please go to that box and see, it will tell you MRP 89 rupees for a 500 gram pack. It will tell you, I am aware of the price. It will go at that rate, right? Which means the end consumer has to get it. Which means if Vinay buys it, he has to get it at 89 rupees, right? So the industry works this back. It works it back. It reaches to Vinay through 5 supply chain scenarios. So Hindustan Lever will actually be selling it at 63 rupees per 500 grams to the super stockist. He will charge you 18% tax. It will come to, let's say, 72. But the subsequent wholesaler will take the credit of this 18 rupees, which means the basic price remains constant. The tax credit keeps accumulating from one to the other, but the margin gets subjected to tax again, because the wholesaler is not doing business free of cost. He needs a 10% margin, right? So on 63, if it is 10% margin, it becomes 69 rupees. So on 69, he will charge 18%. Tax paid on 63, he takes a credit. The difference between these two, he pays it to the government. Then from there, it moves to the wholesaler. Wholesaler will charge 73. Ultimately, when it comes to the retailer, it will come, let's say, at 72 or 73, on which he will charge 10% tax. Therefore, it reaches you at 79. So there is a credit system that is available through the network. So the network will track that in a goods and service tax regime. That's why I said it's largely paperless, provided, as madam said, there is no break in the chain and there is no evasion or avoidance. It's presumed that the government will come down very hard in a goods and service tax regime. Oh, okay, yeah. So in the supply chain, it will get subjected to tax. Yes, ma'am. One last question before I leave the floor to Vinay or any of the faculties. Yeah. One last question. Nobody has a question? Then I have a question. If nobody has a question, I think if you don't ask a question, I think wherever I point my finger, that student has to stand up and answer my question. So quickly decide. Yeah. Yes, Saurabh. Ujjwal.
So according to what we have learned in direct taxes, income
What, according to?
whatever we have learned in direct taxes.
Direct taxes, yeah.
Income from lottery betting comes under other sources. And then we set it off saying TDS deducted. So here, how can we tax it? Here you show that lottery
Demerit.
betting and other.
Okay, can we go back to that slide?
So
Yeah.
if we are charging it under direct taxes, how can it show that it's an income from indirect tax?
Ujjwal, have you gone to Goa? Say yes. Yes. You have also gone to a casino, right? Huh? We have also visited Tito's. Yes, we have visited Tito's. Right? That's how we know this. Nobody is going to bully him later. Okay. Now let's get this clear. Admission, let's say, into a gambling den or across that Brigade Road corner, I forget whatever is that name, at the basement, right? So you gamble there, you play, right? You put it in the slot machine, right? You get in there, put 100 rupees, take your coins or tokens or call it by whatever name, put it in the slotted machines, play your game. Is that gambling? Is that amusement according to you? How many of you say it's gambling? Yes. The girl here in the check shirt. Yes, brown. Behind the green. Yes, I don't know your name. Yes. Is it gambling or is it a sport? Is it a sport or is it gambling? Use your common sense.
I would say it's gambling.
Okay. It's gambling, right?
Yeah.
Another example. You've seen the race course, right?
Yeah.
Is that gambling or is it a sport?
Gambling.
Huh?
Gambling.
Vinay heads the Karnataka State Cricket Association. The matches that happen there, is it gambling or is it a sport? Nobody gambles, nobody wagers, nobody bets. So, now, what is the law saying here? The law is saying here that betting and gambling, like cricket is a sport, racing is a sport, but cricket is a game of national sport, whereas racing is a sin sport. Yes, I am. Sin sport. So the government has segregated this into several parts. Now the slotted angle, whatever. in Goa, or the Brigade Road that you enter into, or the bowling that you go, right? Bowling that you enter into will all be classified as gambling and not as sport, because you amuse yourself and it is not a mass entertainment. It's not a mass entertainment. If it is a mass entertainment, it is a sport. If it is an amusement to oneself, it is betting or gambling. Betting or gambling. Therefore, the government has segregated this. This will get into demerit rates. It will get into 28% plus surcharges and cesses. You can expect close to 100% tax on these activities. Yeah? I thought that was his question, right? Betting, gambling. Have I answered you or not answered you? I have not answered. Okay, what's your question? What's your question? Pritisha madam, can you explain? Yes, now I'll answer the direct tax part. Yes. In the case of direct taxes on this income, you pay tax on income. You pay tax on income. Income earned. Whereas in the case of indirect tax, you pay tax on entry or amusement or betting. Now you got the difference? That's tax on income, because he has labor, he is employed 3 people, he is paying rent, he is paying wages, etc. So on income you pay income tax. On entry you pay your goods and service tax. Yes. Thank you so much. Thank you all children for having me. I hope I am able to do justice. We go back home. We go back home with a single resolve that we will adhere to seeking bills in every single transaction. We will not give rise to any doubt that madam asked that is it possible not to raise a bill. We will insist on bill. We will be a part of nation building. Thank you so much. Thank you all.